Hello and welcome. This is the Insurance Pro Blog Podcast. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance and life insurance adjacent topics.
That's right.
Mm-hmm.
Had to put the disclaimer on there.
And we have a life insurance adjacent topic.
Yes. Yes, we do.
As a reminder, we have weaved in a few times annuities or life insurance products too.
We need to have t-shirts made.
Maybe it could be a toaster and we engrave that into the side. Genius marketing plans that will go nowhere.
Oh yeah, that's true. Speaking of genius marketing plans, if you have questions and you would like to talk to us about life insurance or any flavor of fixed annuity, whether that's a single premium immediate annuity, a fixed indexed annuity, a multi-year guarantee annuity, which we're going to talk about today, please go to the description for this podcast. There's a link there, or you can go to the insuranceproblog.com, and there's several ways, if I can get my words right, several ways to get in touch with us. You can even schedule a time to talk to us on the phone.
We have worked very hard at making sure the contact us aspect of the Insurance Pro Blog website or Pro Blog website is on every page.
That's
like,
right.
If you don't know how to get in touch with us, I got nothing for you.
We sell these products. Yes, we do.
We do.
We've had people ask us over there, I don't understand. Do you actually sell? Like, we're doing a terrible job.
We are. Well, yes, but most of the people who say that are people who are trying to sell us on some sort of marketing program that they want.
That's true.
There's always that. So MYGAs.
I get all the ones about sponsored guest posts. They want to.
Yeah.
I was wondering, I got one the other day. This cracked me up. Are you open to content about gambling and cannabis? I was like, have you read our website? Am I open to reading about either of those? Sure, absolutely. Will I let you put it on my website? No.
Not yet. Give us a few years.
They always want to know, how much is it to publish an article? $10,000. Let's just cut the conversation off now.
Oh, that took a turn. So MYGAs. MYGAs, multi-year guaranteed annuities.
That's such a fancy word.
It is. The big message for today is for people who own a MYGA, or even if you're thinking about buying a MYGA, you should be very, 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 very aware that your MYGA will auto-renew at the end of whatever your guaranteed period was.
Right.
And it is extremely important that you be aware of that timeline, because the chance that the company you bought a MYGA from that was, let's say, top of the list of interest rates when you bought it is still at the top of the list of interest rates now that it's going to renew. Ooh, very low. Very low probability that's going to be true.
Yes.
These things tend to bounce around.
Less than 1%, I would say.
Yeah.
I mean, I say that. I mean, that's purely anecdotal, but I've been doing this for almost 26 years. And you've been doing it for only a little bit less than that. And so combined, we've been doing it for a long time. And I don't think I've ever seen a renewal rate that was higher than what the initial rate was.
Nope. I can tell you that we did a little bit of MYGA business last year.
Yeah, that's right.
A little bit. Yep. And the companies that were top of the list that we were doing the MYGA business with last year, I can't even find them when we call up the top MYGA rates now.
Yeah, that's
true. That's not to say that something's going that bad. Nothing. MYGA, like safest, easiest, not huge profitable product, but like if you're an insurance company that loses money on a MYGA, something is terribly wrong. So like they just get to a point where that deal isn't a deal we can offer anymore. So we're done with that and we're moving on.
Yep. And one thing I've noticed, I'm sure you have too, a lot of times, not always, but I think right now it's safe to say this. If you go and look at say 5-year, 7-year, 10-year, whatever, I'm just picking random terms. And you look at the charts of interest rates and the companies that are offering them, they are not the names that most people would recognize.
Oh, no, not usually. MYGA's pretty niche.
Yeah, it's niche. And I want to say this without scaring people, because I don't want you to take this in a way that makes it sound scary. They typically, the most competitive products seem to be, at least for the moment, and this has been the case, I would say the majority of my career, are offered by smaller companies that you may or may not have heard of. And they use MYGAs as a way to grow their business.
Yep.
And so many times, and I'll say this is not a sales pitch or anything like that, but if you see a rate you like, you should get it, because it may not be the same next week. Well, and many times when these companies have a really competitive rate, they get flooded with applications.
Yeah, they do. They get flooded, and they get to a point where they've collected more money than they can
pretty
buy
quickly. Yeah.
Someone
from actuary calls up to someone at the C-suite and says, "Yep, we've had enough of that. We can't take any more premium." So,
on the topic of their smaller companies that have far less brand name recognition, which I totally get. And I do understand that there may be some hesitation to do that, but I think people do the exact same thing with CDs.
Sure, of course.
Like when you go online shopping for CDs, and people do that.
Yes.
I mean, Bank of America doesn't generally have as good a rate as Santander Bank or something like that. Like it just,
or it may even be some really small community bank in Ohio. Because a lot of people don't realize this, but most banks broker CDs. Yeah. So
the Stake on the Lake Savings and Loan has the best rates going right now for 5-year CDs.
I was going to say their local customers would not be happy to hear that the brokered rates they pay on CDs are higher than the ones they're paying their local customers.
Right.
But they do it to shore up their balance sheet. That's why they do it. They need deposits. So that's how they get them.
So let's start, now that we're 7 minutes in, with just a
Oh, we can start now?
What is a MYGA for the uninitiated? So it's an annuity product that functions like identically to a CD.
Yeah.
You pay a premium. We can't say deposit. There's rules about that. But you pay a premium and you earn a fixed guaranteed interest rate for a specified guaranteed period of years.
Yes.
Big difference. It doesn't have FDIC insurance.
Yep.
You were supposed to gasp. I had that in the notes. There we go.
No FDIC insurance?
Yeah. The other thing that makes them very different, though, MYGAs are annuity products, so the interest that's earned each year doesn't get recognized by you as income for income tax purposes.
Right.
So CDs, if they're owned in an IRA, that doesn't necessarily apply. But if you just buy a CD at the bank, all the interest that's earned is going to become recognized ordinary income for you for income tax purposes. Not true with a MYGA. That gets deferred.
Yep.
And one of the reasons somebody would roll their MYGA is to further defer the income.
Yeah.
So whether that's a deferral from an automatic renewal at the company, or you transfer it to a different insurance company, different product via 1035 exchange, all of that skirts the recognizing the earnings as ordinary income.
And I don't know if we have statistics, but many, at least in my own experience, many people who buy MYGAs never spend the money. It just
they treat them like CDs.
It's continuously rolled to at the end of the term. It's a 5-year deal. At the end of 5 years, they're looking for something else. So
they treat them like CDs, and I don't know what your experience is, but everybody I've ever known who owns CDs never spends that money either.
Right. They might take some interest occasionally, but which you can do with a MYGA too, by the way. So, there's that.
MYGAs generally offer better interest rates. So according to the research we did ahead of time, average 5-year CD rate right now is 3.7%.
Did you say 5-year or 3-year?
5-year CD, 3.7.
That's significantly lower than MYGAs.
Yeah, for MYGAs, it's more like 5.5.
Yeah.
And if you go to the local bank, as you mentioned earlier,
yeah. And the thing is, that's a pretty substantial spread at the moment. It's not always that significant, but it is right now.
It is. Now, structurally, the way
they were even better. They were even better a year ago. So
yeah, yep. Structurally, what banks are doing to create interest for CDs is different than what insurance companies are doing to create interest for MYGAs.
Okay.
And CDs are a deposit product, and they have kind of lockdown liquidity.
Yeah.
And the interest that is paid is basically an incentive to give the bank money so they can turn around and lend it.
Yes.
Insurance companies are buying bonds.
Right.
So all they're doing is matching what they can get for yield, putting in some spread for margin for profit for them, and then saying, okay, here's what we can pay you on a MYGA. So they are functionally very different in terms of how they are creating the interest to pay to you. And there's an argument that there's a lot more safety in the way the insurance companies using using what it generates for interest to pay on MYGAs versus how the banking industry is paying interest on CDs.
Right.
Now we can talk about the Fed.
It's very straightforward with an annuity, like you're talking about. I mean, there's no mystery. If they're paying you 5, they're earning something more than 5. That's
yes, correct. So when it comes to renewal, just like CDs, which will automatic renew, and then you're in another however many year period earning the interest for MYGAs, the same thing happens. And just like CDs, you may find out that the interest rate that you signed up for 5 years ago or 3 years ago or 7 years ago or however many years ago it was is not the same interest rate now. And it probably won't be as competitive as it appeared back then.
right.
So it is very critical to start looking at what else is out there for interest offerings on MYGAs as you get close to the end of your guaranteed period. But the other thing that you could also do with a MYGA, because it is an annuity contract, is roll it into a different style annuity if you want to.
Yeah.
So if you decide, I own the MYGA, I've been doing it for the accumulation of interest, but now I would like some income benefit beyond just the interest rate that's payable in the MYGA.
Yep.
Well, you could just 1035 exchange the MYGA into a SPIA or a fixed indexed annuity with an income rider.
Yep.
And you can split these things. So when you 1035 exchange, it doesn't have to be all or nothing.
Right.
You could decide, I've got $500,000 sitting in a MYGA, and I'm going to move $250,000 to a SPIA and $250,000 to another MYGA.
Yep.
Those are all options. The one thing you cannot do, you can't 1035 exchange the MYGA or any annuity into a life insurance contract. It doesn't work that direction.
Yep.
So be aware of that. But for sure, we know that the products that were super competitive even a year ago are not the same products that are super competitive today.
Yeah.
So, and we definitely know
that can
people
change, I would say week to week, but more month to month.
Yep. Of all the things that we get regular emails about changes in annuity products, it's MYGA interest rates.
Yeah. I have a couple of outfits that send me rate sheets every week. That's how often it could change. That doesn't mean it's always different, but they're in the habit of doing that weekly.
They do bounce around. And
yeah,
the 1035 exchange process is pretty straightforward on an annuity. So it's a matter of filling out the application for the new annuity and instructing your current company that you're going to be transferring money to that place.
Right.
And when you do that, again, 1035 exchange is a tax-free transfer of the money. So you do not still have to recognize the earnings that were achieved. And long-term, deferring the earnings for income recognition purposes, for income tax purposes, will grow you a larger account balance than having to pay taxes each and every single year on a CD.
Yes.
And because there's a drag on performance because of income tax liability, and because CDs pay a lower interest rate in general, they definitely fall behind what you can achieve accumulation-wise versus MYGAs.
Right. Agreed.
Now,
you get to take advantage of full compounding. I mean, without any.
A lot of people frequently ask when it comes to moving their MYGA, well, what happens if we haven't reached maturity yet? Like my MYGA hasn't matured. Like, how do I get the timing right on the transfer? And the answer is, well, we definitely want to set this up prior to, not after.
Yeah.
So insurance companies are very accustomed to receiving requests for 1035 exchanges that have a date on them, which is to say, don't transfer until. It could be maturity. It could be a specifically identified date, whatever it is. They know how to work with that instruction.
Right. And realistically, you're not going to do it maybe a month before, because you're not going to know what rate you're getting, and you have to, again, remember we just said the rates change. So
right, there is a certain kind of matching the right timeline. There is a process for locking rates.
Yeah.
For applications, that time frame varies from company to company, but in general, you can identify the new MYGA, submit the application, and know that it's going to be a few weeks of paperwork and processing time.
Right.
But because I submitted this application, that's my rate.
And the company will tell you if you ask them, what's the lock period here?
Yep.
Like what? Very similar to like a mortgage rate lock. Some will be longer than others, but.
So,
and all that means is there's a drop dead date whereby that they have to have the money by this particular date.
Right.
To honor the rate that they've quoted.
And in that world, I've gotten close to the timeline, but I've never had major problems when it comes to transferring MYGAs. Like,
so are you going to talk about surrender charges?
No, I figured that part was unfavorable to MYGAs, so we just skip that. Because, I mean, there's all these things we get accused of doing, so why not do them? MYGAs do have surrender charges. Most of them. Well,
I liked everything you said until now.
I know. You had me a little queasy on that FDIC insurance thing, and now that I know there's a surrender charge, forget it. No, they do. And that means that you could end up losing more than just the interest earned on a MYGA.
Yeah.
Sometimes that would be the surrender charge, but oftentimes it's some number larger than that. And this is where it gets super complicated. Some MYGAs also have market value adjustments.
Yeah.
Yeah. Now it's getting deep in the weeds. So a market value adjustment is just a further adjustment of the cash surrender value of an annuity if the interest rate environment has moved in one direction or another. Sometimes a positive adjustment, sometimes a negative adjustment. But understand this, the surrender charge on a MYGA is never longer than the guaranteed period of MYGA.
Right.
So if you buy a MYGA for 5 years, then the surrender charge may very well be for a 5-year period.
Yeah. It's just to disincentivize people from using it as a temporary savings account.
Correct.
It's
yes.
like,
yep,
we're going to honor this guarantee that we're giving you. What we're asking you is that you leave the money alone. Because it makes our lives complicated if you don't. Not us as agents. I mean, the insurance company is what they're doing. But that doesn't mean you don't have access to any of the money.
Correct. That was the next comment, that annuities generally have some percentage of withdrawal allowance available.
Yeah, usually 10%. Usually they call it a free withdrawal provision. And usually they'll allow a 10% annually of, if it's a $500,000, that means $50,000 of penalty-free withdrawals. Now that doesn't mean you're definitely going to have to pay taxes on that because now you've taken the money out. But you're not going to have any surrender charge if it's only up to 10%. And typically that's every year.
Yeah. Yep.
A lot of times after the first year. That can vary from company to company as well. But
it can. And sometimes there's an option to get a larger surrender-free withdrawal percentage if you're willing to take a lower percentage rate on the MYGA. So that's also there.
Yep.
For what it's worth.
A lot of people will ask too, well, like, does surrender charge apply if I die?
No, not generally.
That's right. Most of them waive it. Some of them even have nursing home and terminal illness waivers too.
Yep.
And to me, we'll go back to one of our old faves here. One of the best parts is it avoids probate.
It does, because you'll name a beneficiary and that person will just get paid whatever the cash value of the MYGA is if you die.
So many people roll their eyes at probate till they go through it. And then they're like, now I know what you're talking about.
Then suddenly everything they own ends up in some sort of asset that won't be subject to probate.
Yeah, exactly. They're like,
this is true.
It took months to get depends on your state, really, and your locality to some degree.
Yeah.
But as you know, and I know, it can take a lot longer than what most people would consider reasonable.
Generally speaking, yes. There's a stark divergence here in Vermont versus a place like Massachusetts, because we got nothing going on here. But you go down even to rural Massachusetts and find out they got way more people trying to clog up the courts here. So.
Yeah. Exactly. Yeah, I've helped file death claims on annuities. A few, I'm sure you have too.
Mm-hmm.
Really,
that was my very first death claim, actually.
Oh yeah,
as an insurance agent, was an annuity.
Yep. In my experience, once you secure a death certificate, fill out usually like a 1 or 2 page claim form. A big deal. We always help people do those.
Yep.
And send everything into the company. My experience has been like a week to 2 weeks. They got the money. The beneficiary has the money.
Yep.
So
yeah, it's
that's pretty dreamy compared to the probate process. So.
Yeah. There was even a situation with my particular case where the insurance company's records were not. They were missing some information for some weird reason. I'm guessing it was just it got input into a system and somebody left some information out as they were taking it from the application.
Right. Because they never would have accepted the application from you if everything wasn't filled out. So
right. So all I had to do was give them a copy of the original paperwork, which I still had, and that got resolved in a day. And then they sent the checks out.
Yep. It's just very clear because it's contract law, not probate. So it's like, well, yes, this person owned this policy. This person is dead. This person said they wanted this person to get the money. So we'll send them the money. You send us proof that this person is dead. We'll send you the money.
Yep.
It's pretty cut and dry.
Yeah. I do also want to just spend a minute or two on the fact that I mentioned earlier, you can transfer to other annuity contracts. And there are times that may be strategically beneficial from certain income tax perspectives, especially when it comes to SPIAs, for example. Because if you own just a regular MYGA and you've been deferring the gain on that, and you roll money from the MYGA into a SPIA, you have a cost basis, which means you can use the exclusion ratio.
Mm-hmm.
So now you can start collecting an income that is partially taxable, but partially not taxable.
Right. Which you would not be able to do from the MYGA.
Nope. Correct.
Because MYGAs are LIFO, right?
Yes.
Did I get the term right? I always forget my FIFOs and LIFOs.
Yep.
So that means all the gain comes out first.
Correct.
Which means all of it is taxable.
Mm-hmm.
Where with a SPIA, you get the exclusion ratio, which part of every payment that you get is principal and part of it's interest.
Yep. So it actually makes a lot of sense if you're thinking about starting to use the MYGA cash for income to seriously consider a SPIA.
Yep.
And again, it doesn't have to be everything. It can be a portion of the cash gets 1035 to a SPIA and the rest of it goes somewhere else. That's fine. But that is a good way to distribute income and have a bit of a tax benefit behind it. And, if you come to the great helpful people at the Insurance Pro Blog, we can walk you through all those scenarios because we have access to the entire MYGA marketplace, but we also have access to the entire annuity marketplace. So we can walk you through not only what the top rates are, but what other options you may not have thought about could be when it comes to using the money.
Yeah. Yeah.
And
you might find it helpful if you don't know exactly what you want, but you know what you want your result to be.
Mm-hmm.
That's actually ideal for us. Like,
yeah,
you tell us what you want the result to be. We'll figure out the best way to help you get there.
And that might even look something like, well, I don't really know at this particular moment in time. So maybe the answer is you were in a 5-year MYGA. Now you should go into like a 1-year MYGA, 3-year MYGA, whatever. And then we sort out the rest of it.
Yeah.
Like that can happen.
Mm-hmm.
Or it may be the case that there's some sort of accumulation style annuity that's not a MYGA that has a better interest rate that you don't even see when you spreadsheet MYGAs because it wouldn't show up there.
Right. Yep.
Those do exist. They come and go kind of oddly, but they're out there.
Mm-hmm.
So
Very
if you own one, don't just auto renew. If you're thinking about buying one, keep this in mind for when your guaranteed period is over. And if you have a lot of CDs and you want a higher interest rate, think about MYGAs because they could totally increase the amount of interest you're earning.
Absolutely. Yes. Definitely.
Okay. That's all I came with. Anything else?
Nope. Just click the link in our description or come over to theinsuranceproblog.com if you would like to talk to us about anything related to life insurance or fixed annuities.
Cool. Well, until next time, I am Brandon Roberts.
And I am Brantley Whitley.
And we will see you next week.